Gold and silver are not guaranteed profits. Prices crash, scams are everywhere, and some investors lose big, but those who know what they are doing always come out ahead. If you want to invest the right way, avoid bad deals, and maximize profit, this video is for you. Why gold and silver are smart investments in 2025. People have always turned to gold and silver in uncertain times. Right now, demand for these metals is rising. Investors are looking for ways to protect their wealth, and gold and silver are the top of the list. Central banks have been buying record amounts, and private investors are following their lead. With global economies facing inflation and unpredictable markets, these metals are becoming a key asset for many. Inflation is one of the biggest reasons people are putting money into gold and silver. When the value of paper money drops, these metals hold their worth. Unlike stocks, which can crash overnight, gold and silver tend to remain stable. Many people see them as a safety net. When economic uncertainty rises, so does their price. It is not just individuals investing. Even major institutions and governments are holding on to gold to hedge against inflation. Another reason these metals are valuable is their long-term stability. Gold and silver have been used for centuries as a store of value. They are not tied to any single economy or currency, which makes them reliable even when everything else is unstable. Many investors see them as a way to balance their portfolios. Whether prices go up or down in the short term, history has proven that gold and silver remain valuable over time. Physical gold is digital gold, what works best. Investors have more ways to buy gold and silver than ever before. Traditional options include physical metals like bullion, coins, and even jewelry. Bullion bars are great for those who want to hold large amounts, but they require proper storage. Coins are easier to buy and sell, but they often come with higher premiums. Jewelry is another option, though it is not the best for investment since it includes extra costs for design and craftsmanship. With technology, digital gold has become an alternative. Gold-backed exchange-traded funds, also called ETFs, allow investors to own gold without physically storing it. There are also gold-backed cryptocurrencies, which are tied to real gold reserves but traded like digital assets. Another option is online vault storage, where companies hold your gold in secure facilities and you can buy or sell portions without handling the metal yourself. Each option has its pros and cons. Physical gold gives full control and ownership, but storage and security can be a challenge. Digital gold is easier to buy, sell, and manage, but it relies on third-party platforms. For long-term investors who want something tangible, physical gold may be the best choice. For those looking for convenience and flexibility, digital options might be the way to go. It all depends on individual goals and comfort levels with risk. Best ways to buy gold and silver without losing money. Finding a trustworthy source is the first step in making a smart investment. Buying from reputable dealers, whether in person or online, ensures that the gold and silver are authentic. Many investors choose well-known dealers, banks, or government mints for peace of mind. When buying online, it is important to check customer reviews, certifications, and return policies. A good rule of thumb is to avoid deals that seem too good to be true. Scams and overpricing are common in the gold and silver market. Some sellers charge high premiums above the spot price, taking advantage of uninformed buyers. Others sell fake or low-quality products. One way to avoid this is by checking the market price before buying. Reputable dealers will always have prices close to the current market rates. Avoiding private sellers or unknown sources can also prevent costly mistakes. Understanding how prices work is key to buying at the right time. The spot price is the base price for gold and silver, but additional costs like premiums, dealer fees, and taxes can increase the total cost. Watching the market and buying during price dips can help maximize profits. Some investors use dollar-cost averaging, which means buying small amounts over time instead of all at once. This strategy helps reduce the risk of buying at the wrong time. Why gold and silver prices fluctuate and when to buy. Gold and silver prices are influenced by many factors. Supply and demand play a big role, but other things like interest rates, inflation, and geopolitical events also affect prices. When inflation rises, gold and silver tend to go up in value. When interest rates are high, investors may turn to bonds and other assets, which can cause precious metal prices to drop. Long-term investment is a safer approach for many people. Holding gold and silver for years allows time for value to grow. Historically, these metals have maintained their worth, even through market fluctuations. Many investors use them as a hedge against inflation and economic downturns. This method does not require daily monitoring and reduces stress compared to short-term trading. Each strategy has its risks and rewards. Short-term trading can bring quick gains but also higher losses. Long-term holding builds wealth steadily but requires patience. Those who want stability and wealth protection often choose long-term investments. Those comfortable with risk and market research may prefer short-term trading. Understanding personal risk tolerance helps in deciding which approach works best. Have a store of gold and silver safely without risk. Keeping gold and silver secure is just as important as buying them. Many investors choose home safes for easy access. A high-quality, fireproof, and tamper-resistant safe adds protection. It should be placed in a hidden location and securely bolted down to prevent theft. Storing large amounts at home, however, carries risks. If security is weak, it could become a target. Bank lockers provide another layer of safety. They are affordable and offer protection against theft and fire. The downside is limited access. Banks have business hours, and in rare cases, government policies could restrict access. Despite this, many people trust bank lockers for long-term storage. Private vaults offer the highest level of security. These facilities specialize in storing precious metals with advanced security systems. They provide insurance, 24-hour monitoring, and sometimes even the ability to trade gold without moving it physically. The drawback is the cost. Storage fees can add up, making this option better suited for those holding large amounts. No matter where gold and silver are stored, insurance is essential. Home insurance may not cover these valuables fully, so specialized policies are available. Labeling, serial numbers, and proper documentation help track assets. Keeping storage locations private is also crucial. Talking openly about where gold is kept can increase the risk of theft. Whether stored at home, in a bank, or a private vault, taking extra precautions ensures peace of mind and long-term security. Gold and silver can be great investments, but only if done right. Are you planning to invest or do you already own some? Do not forget to like, subscribe, and stay tuned for more.